Welcome to Dual Edge Research, where we provide disciplined, data-driven strategies designed to help investors succeed across multiple markets. Dual Edge Research publishes two powerful newsletters that work great individually and even better together. The Bull Strangle newsletter focuses on stocks and options, combining stock ownership with premium selling strategies to generate consistent income and market-beating returns. The Smart Spreads newsletter specializes in seasonal commodity futures spreads, offering a diversified approach with low correlation to equities. Together, they deliver a complete investment perspective, one focused on income, the other on diversification, all under one simple subscription. Two powerful strategies, one disciplined source, Dual Edge Research. This video will focus on the Bull Strangle newsletter, a disciplined, structured approach designed to generate consistent income and long-term performance through a balanced combination of stock ownership and option selling. In this video, we'll take a closer look at one of the key design elements behind the strategy, the use of weekly option expirations rather than traditional monthly cycles. We'll explore how weekly options allow for more precise timing, faster compounding of premium income, and greater flexibility in adjusting to changing market conditions. By the end of this presentation, you'll understand why the Bull Strangle framework is built around a 4-week rotation, how capital is deployed systematically each Monday for expiration 4 Fridays later, and how this structured timing helps maintain consistency, discipline, and risk control across every market environment. Before we jump into the weekly versus monthly options topic, you can learn more about the Bull Strangle strategy on our YouTube channel. Just search Bull Strangle Newsletter and you will find a comprehensive set of videos that explains the strategy in detail. In this 4-part video series, we'll take you through every aspect of our proven strategy. We'll start with a fundamental options overview, then dive deep into our core strategy and explore risk optimization techniques, and finally show you how our newsletter can help implement these concepts in real-world trading. At the heart of our approach is a powerful 3-part strategy that combines stock ownership with both covered calls and cash-secured puts. This integrated method creates multiple income streams while managing risk effectively. By selling out-of-the-money calls and puts 4 weeks out, we create a systematic approach to generating consistent returns. Let's examine how our weekly option cycle works in practice. The Bull Strangle strategy follows a disciplined 4-week option expiration cycle designed to smooth returns, manage risk, and generate consistent income. Each Monday, 1/4 of your investment capital is deployed into new trades that expire 4 Fridays later. For example, if the first cycle begins on Monday, August 4th, those positions will expire on Friday, August 29th. The following weeks continue the rotation. August 11th positions expire September 5th. August 18th positions expire September 12th. August 25th positions expire September 19th. By staggering entries this way, you always have 4 groups of trades active, each at a different stage of the cycle. This weekly expiration cycle offers 6 key benefits that give traders a significant edge in the market. These advantages work together to create a robust trading system that can weather various market conditions while generating consistent returns. Benefit number 1, reduce timing risk. When trading monthly options, you commit your capital all at once. If your entry point happens to coincide with a market high, you carry that unfavorable entry for the entire 4 weeks. Weekly options reduce this timing risk by staggering entries. Instead of going all in on day 1, you enter roughly 1/4 of your capital each week. This dollar-cost averaging approach smooths entry points across different market conditions, reducing the chance that a single bad entry dominates results. Benefit number 2. Flexibility to adapt to market conditions. Markets are dynamic. Volatility shifts, earnings reports drop, and economic news moves prices within days, not weeks. Monthly options leave you locked into a contract that may no longer align with the current environment. With weeklies, you can adjust every Monday, which allows each of the following: First, this shift strikes closer or farther depending on implied volatility. Next, it allows you to target or avoid upcoming events like earnings. In addition, it allows you to rebalance exposure if your market outlook changes. This shorter feedback loop means you're constantly realigning with real-time market conditions. Benefit number 3, lower emotional pressure. Deploying all capital into a single monthly option creates a psychological all-or-nothing scenario. If you're right, you feel brilliant. If you're wrong, it can feel like the entire month is wasted. Weekly expirations reduce this emotional burden. By spreading trades out, your results are averaged across 4 different outcomes, making it less stressful if one week underperforms. This not only improves discipline, but also reduces the temptation to overreact or abandon a strategy prematurely. Benefit number 4, improved cash flow management. Monthly options tie up capital until expiration. That means you wait 4 full weeks before trades settle and cash becomes available again. Weekly expirations, by contrast, generate rolling cash flow. Each week, a group of trades expires and capital is freed for reinvestment or reallocation. This cadence creates more consistent cash management and allows for faster compounding if profits are redeployed promptly. Benefit number 5, better risk control and position sizing. Managing risk is easier when exposure is built gradually. With weekly expirations, you can scale into trades over 4 weeks rather than committing up front. If volatility spikes or conditions change, you can slow or pause new entries. Position sizing is more precise because you're adjusting weekly instead of once a month. Monthly expirations force a single decision point, making it harder to adapt or rebalance risk mid-cycle. And finally, benefit number 6, performance diversification. Markets can behave very differently from week to week. One week may bring a Fed announcement, another a major tech earnings report, and another relatively quiet trading. By entering 4 staggered weekly trades over the same 4-week horizon, your portfolio is exposed to a variety of conditions. This performance diversification smooths results over time, reducing reliance on one set of circumstances. A monthly option, on the other hand, is tied to the conditions that existed at the moment of entry, leaving performance more dependent on being right at that single point in time. The bottom line: trading weekly options over a 4-week horizon provides significant advantages compared to a single monthly cycle of the same duration. By staggering entries, adapting to evolving conditions, reducing emotional stress, improving cash flow, controlling risk, and diversifying performance, weekly expirations offer a more resilient and flexible approach to generating consistent returns. At the Bull Strangle newsletter, we view weekly cycles as more than a tactical tool. They're a structural advantage that investors can leverage to manage risk and enhance returns. Looking for consistent profits in both stocks and commodities? Now you can get 2 powerful newsletters for one simple price. For stocks and options, the Bull Strangle newsletter shows you how to combine stock ownership with dual option selling, a disciplined strategy that has consistently outperformed the S&P 500. For commodity futures, the Smart Spreads newsletter focuses on seasonal commodity spreads, a proven, low-correlation approach that thrives in all types of markets. Each newsletter is designed to deliver consistent income on its own. But when used together, they create a complete, diversified trading approach that works in any market environment. Subscriptions start at just $49 a month, with deep discounts on 3-month, 6-month, and annual plans. And right now, for a limited time, your first month is only $1. There's no long-term commitment. Cancel anytime. So don't wait. Visit bullstrangle.com/products. That's bullstrangle.com/products. And start trading smarter today with the Bull Strangle and Smart Spreads newsletters.